Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, September the 1st. And I'm starting off with a stock which made quite a splash at the end of last week, Evocutis, where there was a sharp spike to the upside through the 200-day moving average, currently at 0.26 pence. And that remains the key feature on the daily chart, over and above the rising trend channel that I've drawn from October, with its implied resistance line projection target towards 1.2 pence. The situation now is with the shares obviously very overbought. RSI is 91, extremely overbought there. On a technical basis, one would be looking for a retracement. The likely area would be towards former resistance at the start of the year. 0.41 was the initial January high, and 0.35 was the February resistance. That ties in with the floor of the channel here, drawn at the same level. So back towards hopefully the mid 0.3 Ps, and then only back below the 200-day moving average would really turn the shares into a bull trap situation, which hopefully would not happen in the near term. As I said, the upside towards 1.2 pence over the next 2 to 3 months as a best case scenario. Moving along to Landsdowne Oil and Gas, where we have a similar sort of spike from a near horizontal floor there over the last month or so. The floor of a rising trend channel from January is at 11.29 pence, and that's a notional stop loss on an end of day close basis for the bull argument. You can see how the shares hit a wall at the 115-day moving average in April, and the equivalent level now is 15.3 pence, which is obviously the initial target here. If we can break through that over the next couple of sessions, one would be quite happy to look for 19 pence, which is the 200-day moving average level, and also resistance in May. The best case scenario over the next 2 to 3 months would be the top of this year's price channel to finish off the year at 25, 26 pence as a destination that would effectively double where we are now. Stock which has been bubbling up for quite a while, which is quite a sort of personal favorite just in terms of how regular this setup looks here on the daily chart, is UK oil and gas. We've had an extended double rebound off the 50-day moving average at 1.09 pence on the floor of a rising trend channel from the beginning of June. It looks like the consolidation that we've had between 1 pence and 1.2 pence is finally over, with a decent weekly close that we saw on Friday. You might want to wait a little bit longer, maybe for a 1.3 pence close as a final confirmation of the break, which should be on its way. But really, it looks like enough work has been done here for the shares now to lift off towards the 2 pence target at the top of the June price channel, which would be a decent 1 to 2 month target. At this stage, only back below the 50-day moving average at 1.09 pence would suggest there's something wrong, especially as we've had a double bounce off the RSI uptrend line from the end of May as well over the recent past. Finishing off with an old favorite of everyone's, probably Xcite Energy. Obviously, the only missing or the only problem here is the way that the shares have not performed according to expectations. This may be the case, obviously, for a little while yet, but it does look as though there's been enough work done in terms of finding support towards 60 pence in the recent past. The price action here now appears to be at least sideways rather than just a downtrend, and there is a decent extended March RSI uptrend line as well, running through towards the 50 level, off which there's been multiple bounces over the course of August as well. So risking 5 pence to make a journey possibly up to the 200-day moving average at 81 pence is what we're looking at for at the moment. There's also an a resistance line projection you can draw from mid-June heading towards 80 pence as well. The ideal scenario is that the weekends are really with a close above the 115-day moving average at 68.8 pence after the failure that we saw in May, and that would then hopefully give traders some confidence that a turnaround is finally on its way, even though towards the end of August we did see a decent higher support level above the 60 pence level. That's it from me. More updates on spreadbetmagazine.com.